Today's job market is tight right now in commercial real estate, and if you're going through the interview process, you might be wondering if you are one of the lucky ones that does end up with a job offer at the end of it, should you try and negotiate and maximize that offer in this environment, or just accept it and be happy that you got any offer at all right now. Now, I get it, I've been there, and I know that the job interview process is stressful as it is, even without all of the other factors that have made landing a new job in 2020 that much harder this year. So to help you along with this process right now, this video is going to walk through whether or not I think you should negotiate an offer you receive in the first place right now, and if that's the case, 4 things to make sure you do in order to maximize your chances of getting what you want. Hey, this is Justin from breakintocre.com, and if you're new here on this channel, we talk about real estate investing careers and real estate financial analysis. So if you're looking to break into the industry or advance your existing real estate investment or brokerage career, make sure to hit the subscribe button and also hit the notification bell so you'll catch any new videos as soon as they're released. So good news, you've gotten your resume through the door, showed well in your interviews, and aced your Excel financial modeling exam, and the company that you've been in the interview process with just sent you an offer letter. Congratulations, and that's definitely reason to celebrate, but what do you do now? Now, many people get so excited when landing a new job, and they tend to accept right away without any consideration into whether or not the offer makes sense from a compensation standpoint and whether or not they're being paid market rates for the role they're about to take on. And this is especially true in times like today with unemployment in double digits and many companies slowing the hiring process significantly for the majority of the year. So in this video, we're going to break down whether or not I think you should negotiate in the first place. And if you are going to negotiate, we'll talk through 4 things I'd recommend doing if you do decide to counter an initial offer. So first, let's talk about the elephant in the room here. Should you negotiate at all? And my answer to this is yes, you definitely should negotiate, but with the caveat that you should only do this if you're planning to accept the offer, if the company can get you where you need to be from an overall offer standpoint. So some people will start the negotiation process just to be able to get 2 firms competing against each other to essentially bid on their salary. But in commercial real estate, I'm telling you, you do not want to do this. This industry is a surprisingly small world, and leading a company down the road of getting you everything you want just to say no at the end of it and leverage that offer to get either a raise at your current firm or to take that offer back to another company to get them to increase their offer as a result is bad news for your overall reputation with the company that you're dealing with, but also in the industry as a whole. Now, with that said and out of the way, if your intent is to take the job, I would highly recommend negotiating in almost all cases, even if you're unemployed right now. Most companies will put out initial offers with the expectation that you're going to negotiate that offer, and they tend to start offers on the low end of their acceptable range because of this. And what this means for a job candidate is that not negotiating at all usually means you're actually leaving money on the table, and in almost all cases, assuming your requests are reasonable, you're not going to see a rejection just because you countered the initial offer. Now, with that in mind, if you are planning to negotiate your offer, what are some things you need to keep in mind during the process to maximize your chances of being successful in getting what you want? Well, first, number 1 is to make it clear to the company from the start that you want to make this job offer work. As much as possible, you want to show that hiring manager that you're committed to the role and the company, and that you just need to work out a few of the details on the offer to make it work from a personal standpoint. And the main reason why this is so important is because to get the things you want to make the offer work for you, whoever your contact point is at the firm is going to have to really go to bat for you to higher ups in the company to justify either a higher salary, a bonus, or any other request that you make. And just like everybody else, this person is trying to save face and improve their own career, and if they have reason to believe that you might not take the offer, even if they get there and meet all of your requests, that person is going to be much less likely to take on the risk of showing poorly in front of their bosses by fighting for someone who ultimately wasn't going to take the job in the first place. Going down the route of a negotiation is also extremely time-consuming for hiring managers as a whole, especially in bigger companies with multiple layers of approval for new hires. So by making sure you're clear on your desire to make this work after all the technical details are sorted out, the better chance you have of getting what you want. Now, once you've made your intent really clear, now you're ready to get into the details of exactly what you're looking for out of the offer. And with that, my number 2 tip here is to make sure that you're backing up and justifying any salary and or bonus requests that you're making in the negotiation. This means that if you're negotiating something like your base salary or bonus structure, and you think that based on your position and experience level, you should be paid more, you need to do your research and actually gather data that supports that belief that you have. In commercial real estate specifically, the annual CEL and Associates report can be really helpful in gathering some empirical data around what the compensation ranges are in the market for certain positions, and the report even breaks this down by position, title, high, medium, and low ranges, and product type as well. Sites like Glassdoor and LinkedIn can also be great ways for you to gather data on what other people in the industry are making in similar positions at similar companies, so those are also really good resources to take a look at. And if all else fails and you're not able to find accurate data, or you want an additional justification layer on top of the market data you found, this could also involve something like sharing your current compensation package and letting the employer know you need to be above that to make the offer work, telling the employer about something like an end-of-year bonus that you're giving up by switching jobs in the middle of the year, or even mentioning a different offer you have in hand from another company that exceeds the offer that you would like to accept. And again, speaking of the hiring manager going to bat for you, for that individual specifically, having the data in hand to be able to justify to higher ups in the company why they should go ahead and pay you more money or give you other things you're asking for is a huge help for the hiring manager directly to be able to sell you to decision makers internally and ultimately increase your chances of getting you what you're asking for. Now, sometimes companies really won't be able to get there with everything you're looking for in an offer. But if you really want to take the job and the offer is great otherwise, what can you do? Well, that leads me to my third point here, and that is to be open to flexibility with how you're being compensated. Especially in a commercial real estate role, there are a lot of different ways to get paid, and many of these unconventional ways end up being much more valuable in the long run than something like a 5% increase in salary or bonus. So in practice, this might look like if a company can't get you to where you want to be from a salary perspective, maybe they can give you the opportunity to invest in deals the company acquires with a smaller than normal minimum investment of something like $5,000 or $10,000. Or maybe they could give you something like an annual $10,000 deal credit that can be used to invest in deals the company buys. Or maybe the company will set you up with a plan to let you invest in the GP or general partner position in deals, which would allow you to participate in some of the promoted interest once that deal is sold. And other opportunities here could be something like taking a piece of acquisition or disposition fees on new deals or sales that you work on, taking a percentage of commissions if you're working in a brokerage shop, or even taking a percentage of something like leasing override fees if you're working in an asset management capacity are all possibilities outside of normal compensation. And these unconventional ways of getting paid also tend to be pretty low risk to the company up front, which can be very attractive to an employer, especially in times of uncertainty like we're seeing today. And this is primarily because salary commitments are due to employees regardless of how the company or greater economy performs, but deal and or fee participation allows you to win when the company wins, giving the company more breathing room in their overhead and you more incentive to do your job well on a daily basis. Now, finally, if none of these things are an option or the company still can't get you where you want to go using all of those different compensation methods, my final tip here is to be open to revisiting compensation at a later date. So this could mean a review 6 months into the job where your pay is revisited, or even a predetermined raise assuming you hit certain objectives. And this not only gives you a clear goal of something you're working towards, but it also gives you time to prove to the company why you're worth what you're asking for. Because during a performance review, when you're asking for a raise, it's one thing to say that market rate is X and you're making Y, but it's a much more powerful conversation to point out all of the revenue generating activities you've done in the first 6 months of the time on your job and how you've directly benefited the company financially during your time in the role. Now, aside from all of these negotiation tactics, one thing I would recommend, especially when you're first breaking into the industry at the analyst level, is to keep in mind that your total compensation package for your first role is important, but it shouldn't be the most important determining factor on whether or not you actually take the job. In the grand scheme of things, the opportunity you'll have to grow within the position and the industry as a whole, rather than the exact paycheck that you'll get every 2 weeks in your first year of employment, is going to be much more meaningful in determining your long-term success in the commercial real estate industry. And to put this into context, this is shown really well in brokerage roles specifically. So it's not uncommon for analysts at big brokerage firms to have base salaries that are anywhere from 20% to 40% less than their peers on the principal side with those same entry-level analyst roles, which can be really discouraging for many people just starting their career on the brokerage side. However, 3 to 5 years into that analyst career in brokerage, if they've stuck with it and worked hard, it's not uncommon for these analysts to now be making anywhere from 50% to 100% more than their principal side counterparts with that same level of experience, and possibly even more if they've moved into a production role. So the bottom line is, if you have the opportunity to invest in deals, participate in promoted interest, or even just learn from smart people who know how to make money in an entrepreneurial environment, those are all good reasons to accept a job offer on their own. Now, with that said, I'd still recommend you negotiate, but do keep that in the back of your mind that the experience you get is worth far more than the $5,000 to $10,000 salary bump you might get up front in case the negotiation process doesn't go as you would have planned. So that's it for my list. I hope that was helpful. And if you have any helpful negotiation tactics that you've used successfully that I missed, make sure to let me know in the comments below. And if you like this video and want to see more content like this on commercial real estate careers, make sure to hit the like button on the video and subscribe to the channel so you don't miss any new videos as soon as they're released. As always, thanks so much for watching. I hope you found this helpful, and I'll see you in the next video.